Morning, everybody. Welcome to the roundup of what's going on around the world and the start of the 2014 year of opportunities. And I think that's exactly what it's going to be. Now, at this point in time, there's still no sign of the rally ending in America. It's really confounding everybody. As we'll look at the chart in a minute, it's been going on now for quite a long period of time. And the last little bit, there's been virtually no retracement at all. Now, I can assure you that we will get a correction of some sorts, and probably within the next 4 weeks, I would think. Quite often, January is a positive month, and partly into February. And I can also tell you that there's a pretty good association between a strong January and a positive year by December. So if we have a really good January, then you can look forward to perhaps a pretty good year. And I think that's going to happen anyway for fundamental reasons. So let's have a look at the S&P and see what happened last week. So the index ended up dropping 4 points, but really it's just been bobbing up and down. We had a little bit of a sell-off during the week, but then it recovered fairly strongly the day after. So there's still a lot of momentum in the US market. And it remains at all-time highs, and encouragingly, the Russell 2000 for small and mid-cap stocks, and also the NASDAQ for the technology stocks, they tend to be the market leaders in both directions. So they'll lead the market up, and they'll also tend to lead the market into a downturn. And neither of those indices are showing any sign of weakness at this stage. So it's not like the S&P index is being held up by the half a dozen major stocks that impact the index. Now, the other thing about America too is that the economy is improving. There's no question, and corporate profits are also good enough to sustain the rally. Now, neither of them, the economy or the corporate profit earnings growth, are spectacular. They're probably about average. But they are good enough to sustain this rally, considering that the US market, is not overvalued for a bull market phase. Price earnings multiples around about 17 is pretty normal for a bull market, and that's about where the American market sits at the moment. And there are other fundamental drivers that I've been talking about throughout the last 6 to 12 months that are very positive for America, not the least being the shale oil and gas energy revolution, which is just changing the face of manufacturing in America. Now, just for the record, the ASX index, 200 index, finished flat for the week. I don't pay much attention to it because it's only telling us about a handful of stocks. But quite clearly, there is a rotation from the Australian banks and other major non-resource stocks, and the money is flowing back into resources. Now, I've been talking about that now for probably 3 or 4 months. It's been a global trend that's been starting very slowly, but now it's starting to get some momentum. And the reason that I say that is we're now getting the impact filtering down the line. It started with BHP and Rio, and now we're starting to see some of the next tier of companies starting to move. So I think the signs are reasonably positive for resources. Now, the liquidity in the Australian market has been dreadful since probably mid-November, and of course, especially so through Christmas, New Year, in the first couple of weeks. That should go up another notch in this week coming, with a lot of the financial professionals returning to work on Monday. The Australian market, there's not a lot of value on offer, not amongst the top 200 stocks. They're all either fully valued or relatively overvalued. There are some, and as members will know, we're pretty focused on those, and we've made some good gains out of those. There's a couple of others that are still yet to get into stride, but I do like the fundamentals surrounding some of those companies, and I think there's some good gains ahead of us this year. In fact, I think 2014 in a lot of ways is going to be a better year than 2013, and we did quite nicely then. So this is the S&P index. We'll pan back and take a big picture view. We've got a massive rally that started in 2009. The index has gone up by more than 2.5 times. The last time we had any sort of meaningful correction was September 2011. We got another couple of little corrections in 2012, but really not very much, only lasted a month. And then from there, as you can see, it's just absolutely blasted away. And the index has not even come back and touched the 150-day moving average. Such is the momentum in the US market. Now you'll notice that where the US index is sitting at the moment is about as far above the moving average as it typically ever gets. And that's why I think a reversion to the mean correction is inevitable. It's taking a lot longer than I would have expected. If you look at the distance between the peaks, between here and here was about the same, again to here. They're all around about the same. The peak to trough gaps are about the same, but this last run now has basically been running since October, so it's getting pretty long in the tooth, and it would be great to see the S&P pull back to, maybe the mid 1700s. I don't believe it's going to be anything terribly significant, but it'll just create some better value and some better buying opportunities. Let's have a look at the ASX 200. By comparison, you can see it's not even the same ball game in terms of the trend. Much weaker here. But if we look at the materials index, had a strong week, and in particular finished off the week here very strongly. Compare that with the financials, and you can see the banks have now started to lose momentum. We're getting lower highs and lower lows. Now, I don't expect too much downside in the Australian banks, but equally I don't expect a lot of upside either. It's pretty much all fully valued. Moving on now to gold, and I think this is perhaps the big unfolding story of 2014. Gold stocks now definitely on the move. There's no question. There's been a couple of false starts last year, but I think this time is probably the real deal. As usual, gold stocks will start to move before the price of gold moves by anywhere from 3 to 6 weeks. Now you can expect volatility in gold stock prices. So don't expect a nice smooth ride with gold stocks. So your trading approach or your investing approach needs to reflect that. Copper up strongly to $3.46 a pound, really reflecting the strength of the global economy. And that's why I think 2014 and 2015 are going to be such good years, because the global economy is improving. Yes, America is, the stock market is reasonably fully valued, but Asia and Europe are not. They've still got plenty of upside. There's plenty of emerging economies that have got plenty of upside. They're still trading at very cheap levels. And we've got maximum stimulus happening and guaranteed low interest rates. I mean, it just doesn't get any better for stock of appreciation than that. However, there are some stocks that are significantly overvalued, so you do need to take some care, and you do need to understand very clearly what you're doing and what you're trying to achieve. Oil down slightly to $94. We'll come back and look at the gold chart in just a minute. And this is the spot copper chart. So you can see it's spent a long time in that range between 320 and 330 from basically August last year through till Christmas time, and now it's moved up into the higher range. So this is a very profitable level for copper producers. So let's take a look at gold. So we've had a big picture decline from 1900. It's been running now for 2.5 years. So this is the price of gold. It's tested the 1180, 1190 area again, which is the low that we had in June of 2013. We've done a retest of that, double bottom, and it's starting to move up. Now, I'm looking for a couple of things. An initial break above and close above 1270 would be a good sign and a required sign. If that doesn't happen fairly soon, then the timing on gold stocks is not quite right. So we should see a move in gold above 1270 within the next, say, 2 to 4 weeks. But ultimately what I'm looking for is a break above 1440. So a close above 1440 would be the ultimate confirmation. And I think if that happens, we're then headed back towards the all-time highs, just under $2,000. And I think the environment at the moment, looking at all the things around the world, looking at the supply and demand equation for gold, I think there is every chance within the next 2 to 3 years we could see gold significantly in excess of $2,000. And if that happens, you're going to see some major gains in gold stocks. So just to wrap up the strategic approach, I've been saying this now for a couple of months, but the short-term correction still has to be a high probability. So you really want to keep some cash up your sleeve. Don't be fully invested at this point in time because I think there'll be better opportunities just around the corner. I expect 2014 will be a year of gains, at least what we saw in 2013, possibly better, but with higher volatility. That is typical when you get more advanced in a bull market. I think it'll definitely be a year, we're seeing it start already, a rotation from yield stocks into growth stocks, and that includes resources. And I think gold stocks could be the really big story of 2014. But please don't get carried away with gold stocks and load up on them because they are volatile, and if you don't really know what you're doing, you can get yourself in a fair amount of trouble. You certainly don't want to be taking tips on gold stocks. You want to stick to the best producers. You want to do your research or get someone to do that research for you, and be very clear about what you're doing. So that's it for this week. I think 2014 is shaping up as a very exciting year, and looking forward to it with a great degree of enthusiasm. If anyone wants any more information, if they want to talk about the market, if they'd like, particularly if you'd like some assistance, then I'm very happy to help. There's my email address. You can make contact with me through that mechanism. That's it for this week. Cheers.